Your mobile electronic devices today are getting more powerful and smaller. Will Mi Technovation benefit from this trend in the consumer electronics industry? Hi everyone, I'm John with the FIRL Guys and welcome back to our channel, the best place for long-term stock investors. In this video, you will learn about Mi Technovation's corporate background and history, its business model, its latest financial results, as well as some of the key things you need to consider should you invest in this company. Before I ramble on about Mi Technovation, do remember to give this video a like. And if you're new to our channel, hit on the subscribe button as well as the notification bell so that you know a new video is out for you. Let's first begin by looking at the corporate structure of Mi Technovation Berhad. Mi Technovation Berhad is an investment holding company that houses 5 subsidiaries. These 5 subsidiaries are namely Mi Equipment Malaysia Sdn Berhad, Mi Autobotics Sdn Berhad, Mi International Private Limited, Mi Components Sdn Berhad, and finally Mi Equipment Korea. Mi International, which the global sales and support services that is based out of Singapore, then goes on to own Mi Sales and Services Malaysia, Suzhou Mi Equipment Taiwan, Mi Equipment USA, and Mi Sales and Services Singapore. Mi Technovation can trace its roots back to the 4th of April 2007, when 2 partners, Mr. Oh Kwan Eng and Mr. Sim Ah Yong, co-founded this company called DPE. DPE developed, manufactured, and distributed semiconductor manufacturing equipment, especially wafer, carrier, tape, and reel, to the semiconductor industry. They secured their first local customer in the form of Inari Technologies Sdn Berhad in 2009, and their first foreign customer was Avago Technologies USA in 2010. In 2011, Oh Kwan Eng founded IPE Tech, which is now known as Mi Equipment Taiwan, to provide maintenance and technical support services to DPE customers in Taiwan. In early 2012, the management of DPE recognized the changing trend and saw that WLCSP was starting to gain traction. They changed their focus from their normal course of business to focus on WLCSP sorting and testing machines. Hang on. Wafer carriers, WLCSP, all these technical jargons. Don't worry guys, we'll get to it in a minute. Who are the customers of Mi Technovation then? These will be guys like integrated device manufacturers, for example, Intel or Samsung, or OSAT players, outsourced semiconductor assembly and test players. Who are these guys? Guys like MPI, guys like Inari Amatron, and guys like Globetronics in Malaysia. So who are the guys running Mi Technovation today? You've got the Group CEO, Mr. Oh Kwan Eng, who has a first-class mechanical engineering degree from the University of Malaya and has more than 20 years experience in the semiconductor industry. He is also the co-founder of the company and is joined by very senior people in the industry, both on the board of directors as well as his key management team. What's the core business model of Mi Technovation? Now, before we talk about the business model, let's talk about what's the problems they're trying to solve so you can understand the business model better. With the increasing need of electronic devices being more advanced, power efficient, and mobile, the chips that go on them needs to be smaller and smaller. One of the things that was preventing the miniaturization of these chips was how they were packaged in the past. It's not just Christmas gifts that you need to package, So the technology that made it all happen is this thing called WLCSP, or in long form, wafer level chip scale packaging. This is where Mi Technovation's equipment come in. They help sort and test WLCSP chips. Why is WLCSP significant for miniaturization? In the past, chips used to be discretely packaged, meaning the wafer is cut into dies and then sent off to be packaged by an OSAT vendor. That all changed when the wafer bumping process was introduced. Bumping involves inserting the dies with interconnects before it is discretely packaged, like what was done in the past. Now I know it all sounds confusing, so let me try to simplify what is bumping. Now, think of it as a slice of cake, and that cake needs to be packaged in a cake wrapping, right? So you have electronic wafer chips that used to be packaged in a cake wrapping before they put in all the legs or what we call the interconnects. Bumping takes away all that. You just take the cake and they start connecting all the connectors directly onto that slice of cake. Once bumping is done, the wafer die is then cut and then inserted into a long tape so that it can be sent to the next line where it is assembled onto the finished electronics product. As electronics packaging technology changed from discrete over to WLCSP, the IDMs and the OSATs need to also change and replace their existing equipment to keep up with the times and to keep up with the technology. Mi Technovation designs, manufactures, and distributes WLCSP machines that have sorting and testing capabilities to the IDMs and the OSATs of the semiconductor industry. They are also investing heavily via Mi Autobotics into industrial automation and factory robotics to help their clients reduce the manpower headcount on their factory floors. One of Mi Technovation's strengths is leveraging on their R&D and technical expertise to create new equipment and products to serve the needs of their customers like the IDMs and the OSATs. Another strength of their business model is having a very good sales and technical team for them to secure sales from their global and local customers. This is done by having technical support teams in close proximity to the customers located in Malaysia, Singapore, China, and the USA. Let's now take a look at their financial performance to see if they have executed well in their business. In 2019, Mi Technovation grew their revenue by 19% and their net profit by 34% from 2018. Over the past 5 years, even before they were listed, they have steadily grown their revenue in a very competitive semiconductor industry. What was even more amazing was that they took on very little borrowings or debts to grow it, and they also grew their assets at the same time. The CEO has stated that his aim is to deliver gross profit margins of between 40 to 50% and net profit margins of between 20 to 30%. This is the benchmark that the CEO and his management team uses while Mi goes on their rapid expansion plan. In terms of revenue breakdown by geographical location, Northeast Asia makes up a chunk of their revenue contribution in 2019, with 156 million out of the 191 million they made. Two of their major customers make up 46% or 87 million of the total revenue brought in 2019. While their customers' name were not divulged in the 2019 annual report, you can take an educated guess from the OSAT or IDM customers that they have over the past years. You have to remember their clients don't buy machines from them every year because Mi Technovation's product also have a product life cycle. Once these machines are at the end of life, if they cannot be retooled, they need to be scrapped and a new machine is bought in replacement of them. Therefore, one of the risks in investing in Mi Technovation is this product life cycle that is very dependent on their customers' design. In terms of cash flow, their net cash from operating activities grew from 14.8 million to 36.2 million in 2019. They did not have positive free cash flow in 2018 and 2019 because they went on a capex spree to expand their business for the future. This included setting up their new premises in Bayan Lepas and Batu Kawan, as well as their overseas operations center to cater for those clients who are centered there. The CEO has also stated, for Mi Technovation to be ahead of the technological curve, he can't find those resources in Malaysia, and therefore he has set up R&D centers in Korea and Taiwan to cater for this R&D expansion. Now, would you want a CEO who is always willing to make bold decisions to grow the business? I know I would. Even while they're expanding and growing their business, their net profit margins has maintained at about 30%, which is pretty commendable. They have even paid dividends the moment they listed, which I know will make shareholders very happy. What are the risks in investing in Mi Technovation then, since I've only said good points about them so far? Semiconductor industry is very competitive and is very driven by new changes in technology and standards. It is therefore imperative that Mi Technovation keeps abreast with these changes and adapt to those changes rapidly. The second big risk we see is that Mi Technovation is a very technical, expertise-driven business. What do I mean by that? They need to hire very smart people and retain them in the company to continue evolving and growing. Its business can't be automated like an e-commerce platform, and therefore is very reliant on the people it hires and retains. The third risk we see is that they are very exposed to the fluctuations of the foreign currency exchange rate, as most of their sales are denominated in US dollars. A declining US dollar would hamper their ability to bring better profits for the company. Last but not least, it is the cyclical nature of the semiconductor industry itself. Because of rapidly changing technologies, IDMs and OSATs don't normally procure machines year in, year out for the changing technologies that they have to keep up with. And therefore, Mi Technovation's business is prone to the fluctuations in the industry changes as well. As a conclusion, with the demand of electronics in our society growing bigger and bigger every day, the demand for semiconductor products and services will also grow substantially. The beauty of Mi Technovation's business model is that they will benefit regardless of end product because of their position in the value chain of the semiconductor industry. This is because they sell machines to the IDMs and OSATs regardless of what chip they develop, and they don't bear the risk of the success or failures of the end product of their clients. The electronics industry also has the wind behind their backs, with a growth rate of between 5 to 6% per annum. Should their factory automation and robotics division, as well as the precision parts business, gain traction, that would add a diversified stream of revenue for Mi Technovation going forward. We hope you have gained better insights on making an investment decision after watching this video on Mi Technovation. We at the FIRL Guys thoroughly enjoy producing these videos for you, but we seriously like to hear your feedback, so please give your feedback in the comment section below for us. Do remember to watch some of our other videos on this channel and tag and share it with your friends if you enjoyed it. You can follow us on IG and Facebook, and see you in the next video.